Okay, thank you very much, Chrissy, and good afternoon, ladies and gentlemen. Look, a pleasure to be here, so a big thank you to Vertical Events for hosting, as always. And so, look, for those that may be unfamiliar with Latin Resources, look, we've been incorporated for a little bit over 15 years, which is quite rare in this space. But it's fair to say that the last 3 to 4 years have been transformational for our company, and that's since the discovery of the Salinas lithium project in Brazil. So look, the team has done a lot of wonderful work, and I'm keen to give you a few updates and also highlight a few milestones in the next 6 to 12 months. So look, firstly, just starting with Brazil, and look, I'm from Perth, we're here in Perth. It may not be known that the quality of mining jurisdiction that we have in Minas Gerais in Brazil is truly world-class. So look, it's a population of about 21 million people, but there's over 300 operating mines. So I think the best analogy that I can make is that it's almost like Western Australia, but in Brazil, but with a phenomenal cost structure, so being low cost. Now look, the things that will really support our project are the infrastructure. So it's a hydro-backed grid, so about 88% of the electricity comes from hydropower, which we'll tap into, and that's also incredibly cheap. So 3 to 5 cents a kilowatt hour, but also the green credentials, being zero carbon, also really help an energy-intensive project like ours. Other factors, mature, port infrastructure, but also roads also really support us in getting things in for construction, but also getting product out once we're in operation. I think it's worthwhile saying that, look, we've got such a wonderful base there from an infrastructure perspective, especially on the hydropower, that, look, in return, we want to make our operation as sustainable as possible. And so in that respect, we'll have a dry stack tailings, which it's a sensitive issue, tailings, but dry stack is an excellent solution for us. Also recycling water. Look, we're doing it at the moment. We'll do it in operation. So I think, the point that we want to make, and especially in the current market with current sentiment, is that we don't just want to be a lithium spodumene concentrate producer. I think that's a vision which is a little bit low for the standard that we want to set. We truly want to be a sustainable producer, both environmentally, but also financially. And look, we have the resource and jurisdiction to deliver that. So the resource. Look, we've been a resource story for the past few years, and rightly so. So look, when I started with the company, the reported resource was 13 million tonnes at 1.2% lithium. Standing here today, a little bit over 12 months later, it's 70 million tonnes at 1.3% lithium and growing. So look, we've got 16 drill rigs on site at the moment. So a lot of that is infill drilling, but do expect some resource upgrades as we head towards our DFS. And look, this thing is showing no signs of slowing down. And we've got a number of targets that, look, once we're done with the DFS drilling, we'll step those out and again, grow that resource. I think, look, one thing I also want to highlight is that the infill drilling is taking place, and that's really to support presenting our maiden reserve, which will support our DFS. But what we're seeing with the infill drilling is that the actual grade is improving. So, look, hopefully you can make out the table, but you can see an indicator there. We've got 39 million tonnes at nearly 1.4% lithium. So I think it just goes to show that we're getting a really good return on investment with that infill drilling. And so I think, exciting news for shareholders there. Look, a little bit more on Colina here. I won't talk too much apart from just stressing the fact that we're drilling this like crazy at the moment. We've got 16 drill rigs here at the moment. I think one thing to highlight, though, is if you look at the mineralised zone in the image to the right, is that, look, this thing was born to be a large open pit. And what that gives you in the lithium space is, I guess, from a technical perspective, the risk is lower. So Brazil is a very mature mining industry, and open cut mining is not a challenge for that jurisdiction. But it also gives you options. You can expand, you can ramp up as you see fit. So look, very happy with the ore body as it's shaping up, and yeah, seeing it as an operation in a few years' time. Look, this is the layout from the PEA, which we submitted in September last year, and as is the case, given we're in the middle of a DFS, it's already out of date. And I think worthwhile saying that we've already improved upon this layout. And specifically, we've improved the layout of key infrastructure, which is going to reduce our holding routes. And what that means is that it's an even further reduction in our already low mining cost, and potentially even lower capital, just in terms of servicing that fleet and the like. So the PEA was last year, the DFS is ongoing at the moment, and we're seeing already material improvements on what we submitted. So watch out for this study in mid-2024. One thing to highlight is that the PA considered a 1.5 million tonne per annum, start, ramping up to 3.6 million tonnes by year 4. So very sizable operation and, something with scale, which, in this industry at the moment, I think the scale really affords you, those economies and those low costs. And so that's, what we're targeting. So look, on the flow sheet, so we've spoken about the resource, 70 million tonnes, that's massive and it's growing. You've seen that the mining technique will be open cut mining, so very low risk. Look, the next question you have to ask is, what does the flow sheet look like? And for us, based on the test work that we've had out of SGS Lakefield in Canada, which is an excellent facility, is that it's always been DMS, and so dense media separation. And look, what that means is that you miss the flotation step in your production of your high quality concentrate, which is what we'll produce. And look, that's enormous for us because it saves capital, it saves risk in terms of that flow sheet development, and also time. And look, for comparison, and we're very fortunate with the spodumene ore that we have, but in WA, look, flow sheet is the norm to produce a high quality concentrate, but the fact that we can still produce a high quality concentrate without flotation is a massive advantage for us. And validation for that is that we have an operation down the road, so 50 kilometres away, called Sigma Lithium. They're producing with a DMS-only flow sheet, and they've been in production for a little bit over 6 months now, but they're already getting recoveries in the mid 60%, and so that's just fantastic validation for us. And we're also using the same consultants, so very much fast followers in that space. So, look, the PEA, look, I'm the CFO, so a finance person, so this is a very attractive business case. I worked for Rio Tinto for 12 years. I've probably looked at, hundreds, if not thousands of projects, and this truly is a fantastic business case. You can look at the NPV and IRR numbers, all post-tax, very solid. But the key takeaways for me, and again, I've looked at a lot of business cases, is that this is low capital, so 250 mil US to get going, but also low OPEX at $536 all-in sustaining cost. So that's landed to your customer. And it's very rare that you get a project in this sector, in mining in general, that's both low CapEx and low OPEX, and that's really due to Brazil. So structurally, we've got a cost advantage that, look, we'll take advantage of, and that really helps us be sustainable throughout the market cycle. So very fortunate, and I think it's worth saying that, look, we're in the DFS at the moment, we've had initial results, we really want to build upon this in the DFS. So PA was fantastic, but we're going to go a step further in the DFS. Look, and probably on that point, so the ultimate production that we anticipated or forecast in our PA was producing an SC 5.5, so that's the concentrate, of 525,000 tonnes per annum after about year 3 or 4. And look, that's a big operation. So Pilbara's run rate at the moment is about 600,000 tonnes per annum. So the PEA was ambitious. But we want to take it a step further. So look, we've got the low costs in Brazil, we've got the large open cut mine, we want to look at doubling that as part of our DFS. So that's absolutely massive. And that's what we want to do because you have to have scale in this industry to make a difference, and that's what we're looking to do. So look, a little bit on the CapEx, which I've spoken about, but I think funding is the most important thing, especially with current market sentiment. So to this end, look, we started an offtake process in November 2023. We also have a project finance kind of market sounding process going on at the moment. And look, both are progressing to schedule. Initial feedback's been very positive. So expect some more announcements on that in the next kind of 3 to 6 months in the lead up to our DFS. I'm actually on site heading out in 2 days' time, and there'll be a few parties visiting as part of that offtake process. So, all things are, steamrolling ahead and doing everything that we can do to de-risk this project ahead of FID later on this year. OPEX I've spoken about. Again, we can be a sustainable and scaled producer in the current market and in most markets that the lithium industry has seen over the last few years, which is an excellent advantage for us. And again, it's a big thank you to Brazil, and structurally, the cost makeup is very attractive for us. Look, I spoke a little bit about Sigma Lithium. If you're aware, again, 50 kilometres away, they started production in about April last year, and so they're still ramping up. But what I want to highlight here is that we follow them very closely. We've got a great relationship. Probably not a month goes past that we're not on site or sharing conversations with their management. But what I want to share is that their Q3 operational result, so They're NASDAQ and Toronto listed, and so as part of their SEC or US listing, they've got to produce quarterly results. And truly their cost performance has been fantastic. So this was after being in production for 6 months. They're producing at $485 a tonne US. And just for reference, Pilbara reports under the same basis, which is FOB ex royalties. They were at $415 a tonne at 31 December. So look, Sigma within 6 months is within touching distance of Pilbara, who've been operating for a lot longer. And Sigma have highlighted that their trajectory is to reduce those costs even further. So look, this is the proof, the validation that the cost structure in Brazil is truly fantastic. And again, we're looking to be very fast followers of Sigma Lithium, because what they've done for the company and what they've done for Brazil is absolutely fantastic. Minas Gerais, look, I'll just comment again, fantastic jurisdiction. It's great to be working somewhere where the government wants you in production just as much as the company. And we've got Governor Zema, the MD of our company, Chris, is alongside, and he's in close dialogue with his counterpart there in Governor Zema. And so to have their support is exceptional. Look, ESG, we could speak in a lot of detail here, but I'll quickly highlight that we submitted the EIA in December last year, so just over a month ago. And look, this was over 2,000 pages, an incredible document that really articulated the sustainable approach to mining that we want to take, and the feedback from the government has been exceptional. And it's fair to say that there's a lot more to kind of be told in this space, and the DFS will do a good job there. Because again, we don't just want to be, just produce a spodumene concentrate. We want to be extremely sustainable, both from an environmental perspective, but also value. So look, schedule, a lot going on in 2024. So, we'll have 2 more resource upgrades this year, which is great. We'll grow this thing even further. The DFS will be around mid-year, so we're progressing at pace. We've got support from Worley, Minsol and SGS, true leaders in this industry. We've got the offtake process, we've got project finance, we've got permitting, and then we've got FID. So look, the team is working incredibly hard, both here in Australia, but also in Brazil. So, exciting news flow ahead for our shareholders and stakeholders. Brazil, located in an excellent location. Look, the market is orientated around Asia at the moment, but that will shift. And with our schedule, we're very much aligned in terms of feeding that North American and European market. And it's fair to say there's good representation from those markets in our offtake process. The board, so look, David and Chris, they founded the company. So there's nobody more excited about pushing this project forward than these two. And it's really quite infectious to work with them. They're incredibly energetic. We've got Peter. Look, we had an announcement out today. He's actually converting to an executive director. So this guy ran Greenbushes for 15 years. When he speaks to lithium audiences, people listen because he just knows what he's doing. And his support, personally has been fantastic. So great to work with him. And also worth mentioning that Brent and Pablo are fantastic and provide a lot of, thought leadership to our company. The team, and look, I'm here, are fantastic. We push each other, we challenge each other for the benefit of the project, and these truly are world-class professionals, so it's a pleasure to work with them. Look, lastly, just on the market. So, look, this was a snapshot at 31 December, just to get the EVs to line up. The share price today is about 20 cents. It's been a tough start to the year for lithium. I think, sentiment is really being questioned, but, we're very bullish on the outlook. The demand from offtake partners is as strong as we've seen it. So we want to say a big thank you to our shareholders for their loyalty, and we've got a big 2024 to come. So thank you very much.